Welcome to Crowdfunding for Startups with the Startup Network and Birchal, part of our Momentum Series programs and our Lunch and Learn as well. I'm Ryan Burns. I'm the head of community at the Startup Network. At the Startup Network, we are dedicated to supporting founders at every stage of the journey with programs, events, and content tailored to help them succeed. We have a vibrant community of over 3,300 followers, and we are proud that 28% of our attendees are actually repeat customers. So welcome back. Today, we are excited to delve into the nuances of modern day financing and explore whether crowdfunding is the right path for your startup. Crowdfunding has revolutionized the way startups raise capital, and we have two incredible speakers to share their expertise and experiences. First, we have Matt Vitale, who is the co-founder and managing director of Birchal, Australia's leading equity crowdfunding platform, and Matt has helped over 160 Australian businesses raise more than $130 million online, making him a recognized expert in the field. Joining him is Ami Bateman, the managing director and co-founder of Pleasant State, a company that has successfully leveraged crowdfunding to achieve significant environmental impact. Ami's journey is an inspiring example of how crowdfunding can propel a startup to success. We have an hour packed with expert insights, practical tips, a live Q&A session where you can engage with our speakers and fellow attendees. Thanks for joining us. A little bit of housekeeping just for if you have any questions, please put them into the chat. What I'll do is I'll make sure that we record them and see that we can get them answered at the Q&A at the end. Don't worry, we'll get everybody's question answered. Along that, if you have any other questions, whether it's about the Startup Network or Birchal, feel free to put them into the chat as well. At the end of the session, we'll go ahead and send this recording out to everybody. So just to let you know, this is recorded and we'll send it out to everybody afterwards. But yeah, we'll get this started and kicked off. I'm going to introduce now my good friend Matt and Ami, and we'll get started here with our Lunch and Learn.
Thanks so much, Ryan. And thanks everyone for joining us today. It's a real honor and privilege to have Ami from Pleasant State here talking about her experience with crowdsourced funding. It's always great to get insights and stories from someone that's been through the process. But for those of you that maybe aren't aware of crowdfunding or don't know exactly what it is, I'm going to canter through some slides just to kind of set the scene and make sure that we're framing things up correctly. And then we can hop into Ami's experience through crowdsourced funding with Birchal and how Pleasant State used it to build a community and raise capital. Might just skip over that one.
Oh, sorry. You didn't need me to say hi. Sorry.
Oh, go ahead, Ami.
Oh, that's okay. I just thought you were pausing. Hi, everyone. I'm really looking forward to this chat, Matt.
Awesome. So I'm going to get through this quickly so we can have lots of time to answer questions. But essentially at Birchal, we give companies the platform to tell stories, build communities, and raise capital online. That's it at its simplest form. Next slide. So crowdsourced funding is relatively new in Australia. The industry started in 2018. There were some fundamental changes to corporate law that needed to take place before we could do what we do. But we help companies raise capital under a specific part of the Corporations Act and their regulated offers of securities. We are the #1 platform for community fundraising in Australia. Since 2018, we've raised over 200 or helped companies to raise over $206 million through the crowdsourced funding regime across over 260 successful campaigns. Next slide. So over 122,000 investments have been originated. The largest raises have taken place on Birchal. $5 million is a statutory maximum, and that's been achieved twice. And we've tested it ourselves. Birchal has raised $5.5 million or $5.4 million across 2 offers, the first in 22 and the second towards the end of last year, where we raised $2.4 million in the 2 weeks before Christmas, which I don't recommend leaving it that late in the calendar year for anyone. But we've definitely gone through the experience that many of our clients have and put a lot of the things that we've learned from our clients into practice for ourselves. Next slide. Okay, so what exactly is equity crowdfunding, or crowdsource funding as we call it in Australia? Next slide. Birchal is what's known as an intermediary. So we are a licensed intermediary that is authorized to host crowdsource funding offers. But as I mentioned, it is a regulated offer of securities. So a disclosure document is prepared, and it is a mechanism for lots of investors, retail, wholesale, potentially unlimited number of investors, to invest in early stage businesses. Now, this is a real game changer because historically, businesses, proprietary limited businesses, small private businesses wouldn't be able to have more than 50 shareholders. So that was one of the major changes of the crowdsource funding legislation. Anyone that invests in a company through a crowdsource funding offer is excluded for that 50 shareholder test. So we have companies like Pleasant State that have literally hundreds or thousands of shareholders, and that was a real game changer. The second is that these offers can be advertised online in a far more liberal way, really, than any other offer of securities. So that presents particular advantages for businesses that are interesting, have a story to tell, can appeal to a wide audience of investors, and that are looking to build a community and raise capital at the same time. So this is an example of an offer that we have live on the platform right now. Canaponics, they're a little bit further ahead than that, over $1.5 million raised. Their offer closes on Thursday night. They're a medicinal cannabis producer. They are building a facility in Western Australia, in a regional part of Western Australia, to grow medicinal cannabis plants, and it's been really well supported by their community. Next slide. But the benefits go far beyond just raising capital. Next slide, as we'll see. It is a relatively fast process. So approximately 5 weeks in a public marketing phase. We run a pre-offer marketing campaign called an expression of interest campaign that'll go for about 3 weeks. And then offers are typically scheduled to run for 2 weeks. And they're run in quick succession. But companies can complete their offer, raise the capital, and then get back to running their business. In contrast to unstructured offers, traditionally targeting private investors, companies often find themselves at the mercy of timelines of investors, their due diligence process. So it gives founders far more control over their timeline, but also their deal terms. And that's an important point because companies are out there telling a story to a national audience of investors, having interested investors respond to that story. But in contrast, the company is in far more control. They are setting the terms on which they're prepared to accept investment, but arriving at those terms in conversation with investors and the interest that they build through that EOI process. It is a publicly marketed offer of securities. So there is a natural increase in brand awareness, which can drive sales. We have seen that, and I'm keen to understand if Pleasant State experienced any of that, but certainly many companies that do have products and services to end consumers see an increase in sales naturally while they're building awareness for their campaign. They're also building awareness for their products. It is almost like an accelerator. There's a bunch of things that you need to learn, skills that you need to acquire to execute successfully. And many companies, on reflection, kind of look at this as an incredible training ground for many businesses. It is the first time that they've executed a digital marketing campaign on this scale. And that requires that you bring in a lot of knowledge and expertise to help you, whether that comes from Birchal or partners that Birchal will introduce you to. But perhaps most importantly, this form of fundraising is increasingly being called community fundraising, or referred to as community rounds. And I think it's a great term because that's exactly what it is. I'm keen to understand a little bit more about Pleasant State's experience, but in building a community, you are building lifelong ambassadors, people that are really with you for the long term and invested in the success of your business and you achieving your mission. Next slide. So there are a range of myths about crowdsourced funding. I think I'm just going to deal with a few of these now. Many people misunderstand the distinction between equity crowdfunding and the type of crowdfunding that's done on platforms like Kickstarter and Indiegogo. Quite simply, Kickstarter and Indiegogo is reward crowdfunding. That's one model of crowdfunding where you're marketing to a broad audience of people, but the thing that's being offered in return is often the product or something that is of nominal value. People are not getting shares in your company, whereas equity crowdfunding, crowdsourced funding is an offer of securities. So people in Australia, people are given fully paid ordinary shares. So that means you're giving up equity in your business and the people are getting shares in return for that, and therefore a share of the upside. Another common misconception is that crowdsourced funding is really only for B2C companies, companies that have a product or service to an end consumer. Although those types of businesses have an incredible head start in identifying a natural audience of interested investors, taking the view that someone that buys your product might also like to invest in your business, it's not the extent of the opportunity for crowdsourced funding. There are many businesses that we've hosted offers for that don't have a product or service to an end consumer, but they're operating in a space that people are interested in, people care about, often with impactful missions. And then there are some businesses like Pleasant State that have products and services to an end consumer, but are also impactful and have a sustainable mission. And they're the types of businesses that can do incredibly well. Another one that comes up is that you'll end up with a messy cap table. And it is true that if you execute successfully, you'll end up with potentially hundreds or thousands of shareholders on your register. But in order to enter this process, companies will revisit their governance arrangements and make sure that they've got a right constitution and right documentation for what they're about to do. And there are many things that you can put in place to make that process more streamlined. One that I think is probably disappearing is that raising through crowdsourced funding is a negative signal. This was something that was definitely more prevalent in the early days of the regime. But I think as awareness is building for what we do and companies are finding success and appreciating the distinct benefits and advantages of raising capital and building a community in this way, that professional investors and others are beginning to understand why companies are choosing crowdsourced funding and why companies are choosing to build a community, and it is becoming less of a negative signal. And kind of related to that point, there is a notion that raising through crowdsourced funding will make you uninvestable to VCs and other professional investors. And I can say that this is a myth and it's been busted a few times. And there are several companies that have either raised money on VCs through the platform during a CSF offer, raised from VCs subsequent to a CSF offer, or have been supported by VCs on their register to enter a CSF process. And then finally, that CSF is really only for retail or mum and dad type investors. And again, that's not true. It's not consistent with our experience. We've had many VCs that have invested through the platform and certainly many high net worth and professional investors as well. So the process for crowdsourced funding, next slide. As I mentioned, there's a preparation phase, then it launches into a pre-offer marketing campaign. This is really to build awareness and engage with investors. Like all capital raising, momentum and scarcity are critical, so getting off to a good start is really important. Companies are engaging with their EOIs, people that have expressed interest during that process. One of the objectives is to find where the early money is going to come from. Strategically, every campaign needs to start somewhere, and it's a task of building out and leveraging that support that you get over the course of the campaign. One of the tactics that is used is to open a campaign privately for a few days. From a compliance perspective, there is really only one opening date for the offer, but choosing to show it to a subset of the audience that you've built for a period of time to allow that early support to come in before you're pushing it to a broader audience is a strategy that really does work for campaigns. But then we get to the offer. Offers will run typically for 2 weeks. Once the offer period closes, no one can invest. It is quite strict. And there's a minimum and maximum target for the offer. And, that scarcity element, I say to many companies, people will take action because the clock's running out or the stock's running out. So, leaning into the psychology, that people are thinking about for these offers and really trying to create, that urgency and that excitement and that momentum is what it's all about. And then we move into our settlements process and, we'll collect payments and that can take 2 to 6 weeks. So there are some eligibility criteria for companies. This is a part of the Corps Act that is designed for early stage businesses. The main one is that a company must have less than 25 million in net assets or revenue within the 12 months preceding the offer. Need to be an Australian company, need to have 2 directors. If you're a proprietary limited company, usually you would only need 1. But there are a couple of things that apply in addition because it is a privilege to be able to raise capital from the public. So it is, normal that there are some additional obligations that will apply to these companies. So what makes a great raise? It's all about audience engagement, sharing quality content, maintaining interest throughout the campaign, gathering feedback from investors, and this can't be emphasized enough that what we do is provide an opportunity for companies to have conversations with people that are interested in their story, that are interested in the mission that they're trying to achieve and interested in investing in their business. And founders really need to lean into that. And this is something that Pleasant State did incredibly well and outperformed many of the statistics that we see on our platform in nurturing that community, large part because it was a community that they had been nurturing even before the crowdsource funding offer. And also hustle. This is an amazing opportunity to raise capital and tell your story and build a community. But it is over a short period of time, which means that, you need to put all of your effort into the campaign, leave nothing on the field, and then get back to running your business and achieving your objectives. Okay, so now we're just going to hop into the Pleasant State case study. And I've got a slide here that kind of talks about some of the overarching figures. But Pleasant State raised over $1 million from over 700 investors and a really amazing campaign executed incredibly well. Really high profile investor that came through, which I'm keen to understand a little bit more about and how that came to be. Amazing coverage. It was on Channel 7 News. Amazingly engaged and passionate fans. And over 80% of the funds came from the expression of interest list. And there are a range of other statistics that Pleasant State outperformed. So really delighted to be covering this as a case study today because hopefully people can learn from the excellent execution of your team. But I might just throw over to Amy now, just for some initial kind of high-level thoughts and reflections on the campaign before I start hopping into some questions.
Yeah, hi Matt. It's so great to see some of this stuff because I didn't know a lot of these metrics, so that's great. I haven't even seen that picture, so I was having a bit of a laugh. Well, it's taken a while to recover from the raise, I won't lie. and delving back, I had to go back and really revisit stuff because I feel like there's a bit of like blockage. But yeah, really excited to talk through it now that we have about a year since it's passed, and can really talk to everyone about some of our learnings.
Awesome. Maybe if you can take us through your thinking to opt for equity crowdfunding.
Yeah, I'd been really interested in equity crowdfunding and particularly Birchal for probably 2 years before we actually completed our raise. I really liked how Birchal and businesses raising through Birchal were able to use that opportunity to build awareness for their brand. So as a consumer product brand, I saw that as a really great opportunity. I waited though for 2 years because at the time, I'm someone who really believes in ensuring that we're delivering good value to people who are contributing to our business. And at the time I had concerns personally just about the valuations. And so, yeah, waiting 2 years, it was really, I guess, great to see those valuations correcting and becoming more in line with what I felt was really fair. And you talked about the myths about VCs not being interested. I guess I feel that the Zero Co raise was a really good indicator that those valuations had corrected and were in line with what VCs and other investors were looking for. So yeah, it was a great, the other key thing would be when building Pleasant State, we were really keen for the business to be owned by employees and the community that really contributed to it. So that was really key, and Birchal and crowdsource funding allowed us to stick true to those values.
Awesome. Well, delighted that you made that choice. I want to talk a little bit about lead investment because I think it's an uncontroversial statement to say that the finding the first check, that early money is always the hardest, and having it makes things easier, of course. But with crowdsource funding, the process can kind of facilitate this cohort of lead investors rather than a single check. Did you have lead investors coming into your CSF offer?
We did. We actually didn't have lead investors within our CSF offer. We did do a small sort of safe round in advance of the CSF, but that was to help fund the campaign. And happy to chat about that a little later on because budgeting for it and making sure you have cash for it is really important. But I guess the reason we opted to not really look for a lead investor is we had prior conversations with impact VCs. And I guess it was really clear to us that in Australia, interest in consumer product brands, and I hate to say it, but interest in female founded brands from that sort of community, looking at the data wasn't particularly great. So, in combination with our advisors, we really reflected on the fact that finding a lead investor, particularly sophisticated investors, would perhaps not be the best use of our time, and that we really should dig in and leverage and rely on our community. And that's what we did. And in the end, only 2% of our investors by number would be considered sophisticated investors. So 98% are retail / unsophisticated investors.
That's fascinating. In terms of arriving, so this is a question that kind of covers on two topics. Arriving at your valuation, many companies will kind of use the conversations that they're having with EOIs to arrive at their valuation, or if they have a lead investor that's already kind of set that valuation, then that's kind of the role that performs. I suppose the thinking is that people that write larger checks are going to be more price sensitive than people that are writing smaller checks. You mentioned that you had 2% of the investors that were wholesale investors. Are you happy to talk about those and to the extent the valuation came up with those investors?
Yeah, or what I'd say is that those wholesale investors didn't set our valuation. Matt, perhaps I can talk to what the process that we went through, because in the end, that's something that we had to do ourselves.
Yep.
And, you know, I was definitely no expert. I had to really leverage my networks at that time to get input into how to do a valuation. But it was quite simple in the end. I engaged an economist off Upwork, and we analysed 60 companies across Australia, the US and the UK that were direct competitors, indirect, and other consumer product brands that had a really great brand. And we just mined Birchal data and Crunchbase data. And from that, we were able to look at multiples. And then we applied those multiples and did some sort of scenario analysis. And then we spoke to people in our network who weren't, some of them invested, but they weren't necessarily investors. And we were just sense checking that. I think the thing that confirmed that that was correct was also the fact that we had this safe round. So, you know, that kind of closed a little bit before the CSF, but we got confirmation people were comfortable with that. I think just being able to talk to that process and have confidence in it, and knowing I could look myself in the mirror, because we'd use data to set that valuation. It wasn't just, oh yeah, we think we're worth this. And, you know, we want to make sure we retain as much as possible. Really wanted to make it fair. So people really, I guess, had a lot of confidence in the process. So that's how we set our valuation.
Brilliant. Okay, so the large investors didn't help with the valuation, but you were able to get some large investors through the process?
Are you wanting me to talk about one particular investor? The sophisticated one, a combination of them were some people in my network who just really supported the brand. There's a few in there. I actually don't know who they are. I went back, and then our largest investor through the campaign, which, you know, we might discuss a little bit more, was the former Canva director and now advisor. And he didn't actually engage with me at all throughout the process. So his investment was just a really massive surprise. In fact, I can still remember being on the way to the gym and Sean calling me, being like, oh my gosh, have you seen? And I was like, who is it? And I remembered he'd expressed interest in the campaign. So we were just really shocked. So despite trying to engage with him and sending our offer doc, he was just silently watching behind the scenes.
Wow. It's not uncommon. And I'm not sure if this is true for you, but I've heard some founders, although really, you know, pleased, but sometimes a bit frustrated as well, because, you know, you can try to, you know, connect with people, offer them one-on-one briefings, but then, you know, people will just kind of just invest, and sometimes write large checks. And yeah, I know that certainly that happened to us with our raise. There were, you know, some people that we were pleasantly surprised to see that invested. But yes, you want to do everything you can to increase the chances of success and conversion, and then you can be surprised by these things. Was that a similar feeling for you?
Yeah, and definitely people who had expressed higher, I guess, investments early on, we did work to really engage with them. So I sent them the offer doc in draft form when we were comfortable with it, to try to get feedback, try to have calls with them. Anyone in our network, we were trying to get a really good indication of their likelihood to invest. So I remember we had a spreadsheet, and every call would be like, okay, I think they're 80% likely to invest this amount. What was really, yes, obviously the Canva director / advisor was a massive shock. That wasn't planned for, but I guess there's an element of luck in that, which, you know, people could somewhat rely on. But the interesting thing, and I think it was because of the times and the economy, but most of the people who were looking to invest significant numbers, a lot of them actually invested half of what they were going to say, which was really interesting to see at the time. So thankfully, you know, combined with their Birchal data and our data from all those calls, I guess that really helped to ensure that we were able to hit our target, that surprise investment. But he came purely through the Birchal platform. So again, not anyone in our network. He obviously likes to monitor virtual investments and has a leaning towards environmental or climate impact businesses. And I guess that was another key reason we chose Birchal, because we were keen on those types of investors.
So it sounds like phone calls, like actually speaking to investors, was a strategy that worked for you. Maybe if you can kind of share a little bit about that, how those conversations went, and if you had any particular strategies or a plan that worked well.
I'm still traumatized by all the calls I had to make, honestly, Matt. And actually, we made some during the EOI, because I wanted to check on, that the limit, the max we were going to set was the correct max, because we knew getting close to that was really important for our campaign. But that's not where we made most of the calls. It was definitely throughout when the raise was open. And we did not anticipate that was going to have to happen. We'd listened to podcasts from other businesses that are raised who just effectively turned it on and got all their investment and didn't make a single phone call. And so we were like, oh, great, excellent. We've done all the work in the EOI. But it became apparent quite quickly that our audience was very different to that. So over 80% of our investors, we, from our assessment, identify as female, and most of those have never made investment, like they've never invested in an asset class like this before. They tend to be a lot more conservative. And so we recognized we were going to have to speak to them and explain the process and get them across the line. I think between Sean and I, again, this wasn't factored into our timeframes at all. We probably made over 500 calls and sent the same amount of messages. So what I would say is that it was critical for us ensuring we had a successful raise. You said hustle, hustle, hustle. I've never hustled so hard in my life. I would climb under my doona often and message my friends and be like, I can't make a single other call being introverted. And so, yeah, my community was just like, keep going. So yes, call, get on the phone. It was actually amazing. Despite being introverted, just the support we had from the community. There wasn't one bad phone call. People were just basically saying, you're doing an amazing job. So that was really surprising and kept us going.
One of my reflections on this, and I think it's something that founders through the process are unaware of, or perhaps don't appreciate, is the calls. They are warm calls. I think it's important to remember that people have already responded to your story, to things that you have put out there, and I think it's helpful to prepare yourself, because I've made a lot of these calls too with our raises, is to prepare yourself that you're responding to their initial action. They've said that they're interested, and kind of look. It is quite different to contacting an investor cold or approaching an investor at an event where you need to grab some of their time and then kind of jam, what you do into 30 seconds and make a good impression so you can continue the conversation. And I think it's easy to forget that sometimes, particularly when you're preparing yourself for your calls. And for people that are introverted, it can be a very confronting thing. But I think it's a helpful thing to remember that these people are already interested in your offer, and they want to see you succeed. They've made the first move. I'm really keen to throw to some other questions, but in terms of advice for people, if there's a couple of things that, on reflection, and also how it's gone, you've stood up this community, or supercharged this community through crowdsourced funding. What has the last 12 months been like for you?
Yeah, so there was definitely, we poured a lot of energy and effort into the raise, so that a little bit was kind of recovering from that, won't lie. We did throughout the campaign, because we spent a significant amount on ads, and so I wouldn't underestimate the investment you have to make into a campaign like this. So excluding kind of virtual fees, about 10 to 12% was spent of our total raise into just running the raise, including ads, PR, legals, and admin. But yeah, through the campaign, our daily average sales doubled over sort of a 3-month period versus the prior 3-month period. So we went from about 1,500 a day to 3,000 a day, which was really significant because Sean and I were having to jump into the warehouse at a night time to help with pick packing because we just hadn't really planned for that growth. But what the raise has afforded us to do is, outsource our 3PL, our pick packing. So we were doing that all in-house, but as we grew, we couldn't manage that anymore. Implementing inventory management system, we've been able to take on, well, Sean and I have been able to pay ourselves a little bit better.
That's nice.
Yeah, exactly. We've been doing a significant amount of work on our retail kind of play and packaging. So, we've had the money to do that. But, I think it's just also brought a lot of legitimacy and brand awareness to our business as well.
Fantastic. And how do you engage with or update your community, like in terms of like business updates and reporting and things like that?
In terms of direct or investor engagement, so we've committed to 6 monthly. I know that Birchal recommends sort of quarterly, but we every 6 months will do a really detailed newsletter, which will report against how we're tracking to all the objectives we set in the offer docs. That'll go down to like the dot point. Outside of that, all of our investors are able to contact us through a dedicated email. And that just comes into our general community triage process. So it's not difficult to manage them, but we're really active on socials and emails. And given a lot of our investors are also customers, given we're so transparent with our community, I think they're often really aware of what we're up to through those channels as well.
Awesome. Might throw to some questions now, Ryan.
Yeah, great. Excellent. That was fantastic. Thanks so much. We'll go ahead and get to some questions now. And thank you all. If you have any more, please just put them into the chat. We'll go ahead and put everybody up on the screen. If you want to actually speak in person as well, just raise your hand and we'll go ahead and also allow you to speak in person. But thanks so much, guys. I actually learned a lot. I've been in the the VC space for a while, but I never really understood crowdsourcing. It's a really interesting whole nother avenue for funding. So really good job, everybody. But let's start out with actually, Julie, since you raised your hand first, I love bravery. So why don't you ask your question in person?
Yeah, and it's just because I was too lazy to type my question in the form. So I'm Julie. I'm the founder of Ivigo. So basically, we're like Airbnb for electric vehicle charger. So I had a question for you, Amy, in the chat first, if that's okay. I was just wondering how many people were in your team, like you saying, answering the phone and doing the phone. Like how many of you was it? Just so I get an idea of the size or the work.
Of course, love your business idea, by the way.
Thank you.
We've got an electric vehicle. It was literally Sean and I, so the two co-founders, and we have a full-time graphic designer. So there was a lot of content that we were producing. Birchal is really amazing with all of their forms and email templates. But we had all of that information really early on and built a whole lot of those emails and content in advance. So it was Sean, myself, and our graphic designer.
Yeah, awesome. And then Matt, I guess like just my question is there, number one, is there like times of the year that you wouldn't recommend to raise money? So if I'm looking and I'm thinking about my our strategy, if I'm looking to raise fund before the end of the year, I'm thinking October, November. Does that mean we'll have to start the process in August, September? Is that how, like, I was working backwards from your timeline? And then is there a danger in getting too close to end of November, December? Like, is there time of the year that you like, don't do it now? Like people are on holidays,
It's a really interesting one. I think over the last, this industry started in 2018, so we're 6 years in, and
Yes.
the first few years, kind of starting from nothing, and it grows. I think over time there's a seasonality to the business that started to evolve, but it's mainly during that December-January period. And I think what our raise last year showed was that it is possible to get deals done right up to Christmas. Like our raise closed, I think, on the 21st of December, which is the Thursday last week before Christmas. And that's hard because that was hard because there was things going on, just that time of year. But I think what it showed was that it's still able to raise money. So I think it's more about what's going on in your business and what's going on in your world, so you can focus on this. Similarly, we've closed offers in January, and we'd like to be busy 12 months of the year, but in order to execute well in January means that you need to get your preparation done pre-Christmas. So I think and those times of the year, because it requires more of an effort or it's a bit unusual for your reasons, they can actually present incredible opportunities because other people are less likely to be raising during those times. A company called
that's good.
Friday, we helped them raise $3 million in February one year. We raised money for a craft brewer in the middle of January. They raised $2 million. So it's really driven by what's going on in your business and when you can devote the time to it. I wouldn't say that there are better times of the year from an investor perspective. It's one of the great things of what we do is we're always open.
Okay. Probably going to reach out in August, September then. Thank you.
Awesome. Thank you.
All right, great. Let's get into the chat. Manisha, you had a question. This is for Amy. Did you go with both industry agnostic investors and industry focused investors, or one or the other?
Yeah, really great question. Again, it was dependent on who was interested during the EOI that came through. So we didn't focus on any particular investor sector. It was completely open.
And Anisha had another question. Can you talk us through how you go about providing intrinsic rewards to your customers and or investors?
Oh, intrinsic rewards. So the rewards that we provided, so the physical ones were vouchers for our business, but in terms of intrinsic rewards, our community just really wants to support businesses that are doing good in the world and that are doing different. So by virtue of investing into us, I think they feel good about the fact that they're getting to shape what business looks like going into the future.
Yeah. Cool. Paul had a question for Matt. Thanks. I've been keen to raise with Birchal. I'm working on the other document now. This has been a very slow process as they've been trying to realign their marketing to suit with Birchal and with what they believe Birchal investors want, which is more hardware, he believes. It would be good for us to get more advice about this. I think specifically about the marketing. If you have any thoughts on that, Matt.
It's probably a hard one to kind of hop into without additional detail.
I'll jump in there first if you want.
Sorry?
I'll jump in there first and just explain a little bit about that.
Okay, great. Excellent.
Yeah, so basically we do monitoring for construction sites for exposures and stuff like this for healthier sites and healthier workplaces. And we've been doing it for a few years, and we've been sort of almost, we're a SaaS business with hardware products, meaning that we put monitors onto sites. Most of our customers love our hardware because it's like a box and they get something and it's got a light on it and it's got pictures and whatever. So they actually really like the product and it helps them do their compliance and whatever. But we've always sort of led from a SaaS business, more to do because investors don't like hardware generally, and they like software and they like those metrics better, etc. I've always felt we're doing it the wrong way around. I've always felt we should be leading from the hardware because of my customer base, which is tradies, builders on sites, and they like physical tools and kits and stuff like this. I feel we would be more beneficial in or get better success with Birchal if we were doing it more from the hardware side of things, where they get a product, they get a toy, they get something they can play with, rather than existing sort of modeling where it's compliance software and whatever. So I've had actually conversations with you guys and with Martin, and I've got offer documents here, and I'm going through them. And to be honest, the reason it takes so long is more to do with us working out what we feel will be more popular for those guys on sites. And everything that I seem to see on Birchal over the past, I've been looking at Birchal for 3 years now, and everything I look, there seems to be something, mostly products, beers or whatever, or the Pleasant State looks really great products, and there's something that they get something, or they're part of something. So for me, I just wanted to know, am I on the right track? Should we get more to that product base, or that hardware kind of toy that they can play with, more so than just a SaaS platform? Or what's better in your community as well as our community?
Yeah, it's a tough one to answer because it always depends. The Birchal community, although there are trends and interests that we're starting to see evolve, and subsets of the community and people investing in kind of multiple things. It's about what the most compelling story might be, and finding the natural audience for the offer. I'm really what you've said about like a reluctance to support hardware businesses is something that we think a lot about at Birchal. I think that professional investors in Australia, or rather founders, have felt that professional investors in Australia don't really understand hardware, or are reluctant to support hardware businesses. And what we've observed is many founders do everything they can to describe themselves as something else, because of that fear. And it's actually something that we're wanting to lean into sooner rather than later. So please connect with me on LinkedIn, and we can pick up this conversation afterwards. Whereabouts are you based? Are you in Victoria?
No, both Victoria and Queensland.
Okay, awesome. So yeah, let's pick this up afterwards. But yeah, I mean, I've observed many other founders struggling with the same thing, and they're hardware businesses, but they don't want to call themselves hardware businesses because they think that investors will run a mile. So.
Yeah. Okay. All right. Cool. I'll reach out to you after. Thank you.
Thanks, Paul. We had a question from Kim. There's a lot of companies on Birchal. How does one navigate through these numbers? And then also for Pleasant State, did you use a template for your valuation, or did you rely more on The Economist?
Do you want to answer the first one, Matt? And then I can go.
Yeah. In terms of people navigating through the offers on Birchal, I suppose really quickly and at a very high level, we took the approach when we built the platform to be more issuer focused rather than deal focused. So companies will have a profile page and then an activity card that cycles through whatever they're doing, and we can kind of differentiate between an expression of interest campaign and an offer campaign. What that means, though, is when people come to Birchal, they're often coming for a specific campaign. So marketing activities and other things drive people to the company's profile page rather than the browse companies page, which we observed overseas was probably the more valuable real estate, certainly in the earlier iterations of crowdfunding platforms. I think that partly answers the question. In terms of discovery through the platform and the ability to filter across campaigns, that's something that we are working on for the user experience and looking at, you know, what will serve investors more. But at the stage that we were at, you know, this has been the focus, is to drive investors to the opportunity that they're interested in. Hopefully that answers your question, Amy.
And in regards to the valuation model, that I developed the work paper and a little bit of a model. I thought about selling it, but we'll see. But feel free, if you want to reach out to me, whoever asked that question, sorry I didn't catch your name, feel free to do so. I can share it with you.
Yeah, thanks, Kim. And then this one is from Nikki. How did you launch your EOI phase? Was it as simple as posting, emailing, calls, etc.? What did you want to have, and what is it suggested to have in hand before you launch your EOI?
Is that a me question or a you question, Matt?
I think it was you.
Okay, excellent. So with what we did in terms of the things that we had to complete before the EOI, that's all really clearly articulated by Birchal. So they have very clear processes and templates for what you should have in place. We actually started ours a lot earlier than what Birchal might recommend, including engaging with our audience. That was because we knew we had a really engaged audience. We wanted to keep building that. We had completed a product based, I guess, crowdfunding campaign through Indiegogo. So we knew the importance of building that community to be as large as possible before we launched that campaign. So we were really active in doing that. And then we set really clear targets in terms of the number of EOIs that we wanted to have before we launched. That information was also sort of provided by Birchal in terms of percentages that would convert. I was quite surprised about our conversion percentage, Matt, because I feel that the indications that you provided were a lot lower from memory. Is it normally 30% convert from EOI to offer? So it looks like we had 80%, which was amazing. And probably a product of all the calls we made, I imagine. But what we also did is we set really clear daily advertising targets and cost of acquisition for those expression of interest leads. And we monitored that daily so we could adjust our budget. And in fact, we did adjust our budget. We increased it by 15,000. So our original budget through EOI was 40,000 on ads. We increased it to 55,000 for the EOI process, purely because we knew we were not tracking to the number of EOIs that we wanted to ensure a successful campaign.
Great. And then we had a few questions from Nanisha. For Amy, do you have any hot tips from your experience for others starting a campaign in the near future within the current market, the economy?
Yes, I would really stress the importance of building your community in advance. We've been doing that over a 3-year period, and it's something my co-founder was really good at. So build that database as large as you possibly can. We were running additional competitions and collaborations with other brands that had raised on Birchal, because we knew they probably had a community of people who were open to crowdfunding. So yeah, build that database, make sure they're really engaged. In our case, we knew that was important as a direct-to-consumer business. Then, I would really stress ensure if you do set your own valuation, if like us, you don't have lead investors, I would say make sure that's a really fair valuation and that you're comfortable with that. And then we developed a very clear execution plan around. We knew who the key segments were for the different audiences, whether they were our own community, whether they'd be cold audiences, if they'd come from LinkedIn or socials. So we're really clear about that. We developed really clear messaging matrices around that, and we knew how we would communicate with them across different channels. We set really clear targets around dollar spend for leads and tracked carefully against that. Birchal was really great in supporting us in building this out and really validating a lot of our assumptions. Make sure you have budget. to execute a campaign. You know, I already mentioned some of the numbers, but we, outside of the fee that Birchal takes, I did the maths, and we spent sort of 10 to 12% of our campaign was on ads, legals, and accounting. We were able to negotiate to pay some of that a bit later, but definitely the advertising, those costs you'll incur up front. So make sure you budget for it, and you know, get on the phones. Don't be afraid, like what Matt said. Your community, people who have expressed interest, are actually already interested, and they already understand your business, and they probably, I would assume, like you as a founder. So they, my experience was that they just love those calls. So make sure you put aside a lot of time to really nurture that community. And as Matt said, hustle, hustle, hustle. It's a hustle. You will need to spend all day, every day on this campaign for the duration of it.
Great. And now we have one from Sajad. This is for Matt. Hi, this is Sajad from Care Engine. What stage is the best to start for crowdfunding? We built a management platform for NDIS providers, and our product is ready for market. Need to raise capital for marketing and sales. Is this a stage that will be eligible for crowdfunding?
I think what I'd say about stage is, you know, we've hosted offers for companies at a wide variety of stages, some with, you know, incredible success, you know, businesses that are pre-launch that really just have wireframes, to then, you know, businesses that have, you know, multiple millions of dollars of revenue. I think the thing is to always be, you know, upfront and transparent. There we go. Sorry, did everyone get that?
That's cool.
Always be upfront about where you're at, and realistic about your expectations on how much you can raise, your valuation. I think sometimes see companies that want to present themselves as further along than they are, because they think that that's what investors want to see. But I think investors want to assess the opportunity as it really is, so they can assess the things that you'll need to do on the near term, so they can assess your ability to be able to do that. And then, you know, if they've made the investment in future, how they can assess your performance as a business. So I think what I'd say is, if you're, you know, at MVP and ready to launch, the things that you need to be bringing to market are the things that you could have done at this point. So if there's customer research, you know, all of the things that you can do without capital, that you've done the deep thinking on this, so then you can show to investors that really the only thing that is needed is capital, and that you've got, you know, a reasonable plan and a fair, you know, understanding that you'll execute that strategy and it'll produce the desired effect. So stage, I think, is probably the wrong question. You know, if we were an investor, stage agnostic, been successful across many different stages, but it's looking at the opportunity. Have you done everything that you possibly can to present this as a compelling opportunity to the market?
Yeah. All right, great. We have a couple more questions that we'll end with. Let's go back to Nanisha. Is there an ideal seasonality business cycle stage in the standard financial year to raise capital and or start a campaign? I think we kind of touched on this a little bit, but does it simply depend on the nature of our respective businesses?
I mean, yes and no. Like naturally, people are distracted over that summer break in Australia. So, you know, we think it's okay to open an expression of interest campaign in, you know, January. And the advantage that we've got is most of it's done on social media. So, you know, if anything like me, you know, look at phone multiple times a day. So, you know, you can get access to these people. It doesn't rely on in-person events and startup networking nights. There is a natural spike in activity around the middle of the year because companies like to, you know, get their offers open before 30 June because of the financial reporting and how the dates fall. But really, we're working as a business, as an industry to, eliminate that seasonality. We want to see volumes just kind of be constantly going up. So anytime's a good time.
Yeah. And then lastly from Anne Marie Taylor, hi Amy, do you think your pre-order Indiegogo experience helped your virtual experience? Would you do that? Would you do it that way again?
Yeah, sorry if you heard me typing and I was responding personally to some of the direct messages, and I said 100%. I think Matt would say the same, given he's done 2 crowdfunding campaigns. You learn a lot when you go through one. You definitely learn about how much work's involved, which is helpful. So yes, one of the other things that you can do though, because obviously not everyone has the luxury of having experienced one of these, is look at successful campaigns and really analyze them in a lot of detail. We did that for both our Indiegogo and also Birchal campaigns. So we picked campaigns that we considered to be best of the best on Birchal, and Sean, my co-founder, did a really big deep dive into those. And that really informed our strategy.
Great. Well, that does it for us here at the Startup Network. And thank you to Birchal and our friend Amy from Pleasant State. It was a really great chat. This session will be recorded. We'll send it out afterwards. But if you do have any other questions, feel free. We'll take a little picture of the icon here, the QR code. I'm sure you can get in touch with Birchal. I'll also send out the contact information for myself. Again, my name is Ryan Burns. I'm the head of community. But thanks so much for everybody, and hope you had a nice lunch and learned a lot like I did. So thanks. We'll see you on the next one.
Thanks, everyone.